Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati. And as interest rates are rising and are going to rise for the next few years, given inflation, more and more issuers are coming out with primary debt issuances or primary bond offers for the retail investor. And this gives retail investors a chance to earn higher returns than inflation. Uh, and it can invest as low as rupees 10,000 rupees, 10,000 in these issues. However, while returns can be higher, which can to beat inflation, there is also a risk involved. And this week, two issuers are coming out with public debt, primary debt offers. One is Muthoot Finance, the gold loan company. The other is Dhani Loans, which is largely a personal finance or an unsecured loan lender. And each is coming out with different returns. Muthoot Finance, given that it lends against gold, which is a very strong asset to hold as a security for loans, is offering bonds from 3 years to 10 years of maturity at 7 to 8% effective yield to retail investors, while Dhani Loan is offering at much higher returns for investors. They're offering 10 to 11% for maturity periods of just over 1 year to 3 years. Now, the reason is very largely because of the fact that each lender's loan profile, the risk of each lender's loan profile, while Muthoot Finance has a security of gold, Dhani offers personal loans. And in periods of stress, when retail borrowers cannot repay, then a lender like Dhani can face issues unless they can get liquidity support from the market, from institutions or the promoters. This is a very important factor because we have seen time and again in times of stress, many weak lenders or lenders who lend against unsecured loans face liquidity issues. So investors should understand the ratios, the very largely what kind of NPAs and capital adequacy these lenders have, and what kind of liquidity supporters that promoters can offer in times of stress. The best place to look at is go to understand is a financial advisor. And financial advisors in turn come to INR bonds because we offer the best solution, the best kind of research for financial advisors to help their clients invest with the best returns and the most information and research bonds. We are having a webinar for financial advisors on Saturday, which is the 23rd of April, and this is at 11 o'clock. And you can financial advisors who want to know how best to help investors invest in fixed income and grow their assets under advice and stock management should attend this webinar to understand how they can partner with INR bonds to help their clients. Please click on the description link here. We'll take you to the registration page. And don't forget to attend the spaces tomorrow, Twitter spaces on how to make money in fixed income in a rising interest rate environment. In other markets, the areas, gsec yields came down today, while rupee and the Sensex Nifty rose, reversing some of the losses seen over the last few days, including gsec and equities and the rupee. And in US Treasury yields rose closer to 3% and can rise higher if Fed is starting to panic on inflation. Thank you for listening in. Do not forget to download our app, Quick Invest by INR Bonds. If you want to know more about investing in primary debt IPOs, download our app, Quick Invest by INR Bonds, and call us, and you'll get the best support possible and the most information and research on these issues. And you can also see what bonds are listed on Quick Invest, a curated list of bonds that is showcased to investors with the best information, our own proprietary risk model, and the highest transparency in the prices. Thank you for listening.